Nandakumar, who's joining us this morning from Manappuram Finance, which is one of 2019's top mid-cap gainers. In fact, it's been up 93%. Mr. Nandakumar, thanks so much for joining us today. We've been talking about the stellar returns that you've seen also in the last 10 years. Talk to us about some of the highlights with regards to strategy that's helped you achieve this and helped you achieve that 41% profit CAGR growth when it comes to the last decade.
So, at the outset, may I wish you and your viewers a happy new year ahead. So, to your question, yes, one strategy was the contract period in gold loan has been reduced from 1 year to 3 months, with an option to the customer to renew that every quarter by paying full interest, plus bringing the LTV to the new level. So this has made for the customer the managing the loan with ease, because he is able to pay the interest at a shorter duration. So he has been made very comfortable. So for the company side, we are able to collect interest almost every month now. So this and the auctions have come down drastically. It used to be around 4-5% of the disbursals, total disbursals in the past, which has come down to less than 0.5% now. This appears to be a good strategy as far as we are concerned. So the second thing is the emphasis on new customer acquisition and maintaining these customer base, because for that we have introduced online gold loan, a digital gold loan, where the customer actually gets a facility of free storage of his jewelry, plus he can use that and avail the loan and service the loan 24 hours a day. Now we see even after office hours, the transactions worth millions of rupees, several crores of rupees are happening even on a holiday. Sometimes it touches 100 crores. So the online facility, the digital facility also has been.
Given the current dynamics which you've highlighted, you've guided for about a 10% loan growth in FY20. Are you on track to achieve the same? And which are the geographies that you think that you're going to be especially focusing in on for growth?
The trend shows that we'll be able to achieve. So the geographies, the growth has been seen all over India, particularly in the rest of India other than the south, other than the southern states, are showing a better growth because of the lower competition amongst the organized lenders. So those areas, even though the family gold may not be that high as South India, but the competition amongst the organized lenders is less. The states, the Bimaru states, as we classify, are showing better growth. The reason may be, yes, there are no other lenders in some places where we are there. So that strategy of expanding to these places where other lenders are not there, where there is a high concentration of unorganized lenders, that strategy is paying off.
If gold prices they go higher, will your dispersals will they start increasing? You have always said that, look, your business is independent of what gold prices is. But when gold prices they go higher, Indians, they have ability to borrow more simply because the collateral prices go higher. If collateral prices they go higher, will your business also go higher?
When the gold prices have gone up, the average LTV in our books have come down. It is somewhere near 60% now, which indicates that many of the customers are not availing the full LTV. Maybe around 5-10%, or maybe at the maximum 15% of the customers may go for the highest LTV. Others borrow based on their need. As far as we are concerned, our contract period is only 3 months. Within that period, we are able to collect that interest. Our average life of the loan is around 70 days only. So 70 days average duration, plus the LTV of around 60% and the ticket size of around 35,000, we feel like we are very much insulated from the price fluctuation.
Let's talk about, in terms of going forward, while current trends don't actually, show any kind of major stress, but since you're also growing fast in the non-gold loan segment as well, what's the kind of AUM you're looking at? How much focus are you going to put in there? And how do you see asset quality trends emerging as well going forward?
So in the non-gold segments also, our asset quality remains the same without any vitiation. In microfinance, our collection remains around 99%. So the strategy is rather focus on quality. Now, what is done is earlier also we had a cap per state. The cap is 10%. While that remains at 10%, now we have put a cap district-wise, because now what we see is the problems are erupted on a local basis. Even maybe some politicians mislead the customers, etc., or some other reasons like flood, etc., etc. So now the cap per district is 1%, with a direction to the management to reduce that to 0.5% in another 3 years' time. So this definitely increases the OPEX. But what is the highest focus is the asset quality. Still, I can say our microfinance company is having the lowest OPEX in the industry, lowest operational expenses in the industry, which is below 5%, which is one of the lowest in the industry. It enjoys the highest credit rating for the CRISIL, AA-. Also because of that, the liquidity comfort for the company remains good. For other businesses like vehicle finance, our GNPA was around 2.9% last quarter. That is maintained at the same level, whereas the industry the GNPA remains higher. So in home finance also, the NPA is brought down consistently. This quarter we are targeting that we brought to around 4%, and towards the end of this year we are trying our level best to see that it is further brought down to around 3%. So the asset quality in non-gold segments are targeted to be improved at the cost of business. But still, these businesses like microfinance, it may grow at around 30%. Vehicle finance also may grow around 30%. Similarly, CV also. So
appreciate your time. We're going to wrap it up right now. The decade gone by has been an excellent one for Manappuram Finance shareholders. Just look at that chart and you'll be surprised that if I have to identify one like real multi-bagger, something unnoticed, not talked about it, last 10 years, the returns in Manappuram Finance, it's at 179 today. 10 years, please. We always tend to focus on Bajaj Finance and Edelweiss, but look at the 10-year return in Manappuram Finance. 13x. 13x, about 14 times, which means your 1 rupee has become 14 rupees in about 10 years. That's a compounded return of more than 25-30%. That's what this decade has done. It has really taken some of the non-obvious names from the financial space, and the value creation what some of these stocks have done is extraordinary. You know, Viniti Organics, Shree Cement, Havells. The decade gone by has been an extraordinary decade, which in a sense was largely dominated by retail businesses, consumer businesses. Consumer boom, in a sense, really unleashed itself in this decade. And that was, I think, getting captured by the market. Now, the point is, where are we headed next? Will we head more towards consumer and leverage, or will we head more towards infrastructure? The point Sunil was making. What I understand about India is that I don't think we are going to get an infrastructure boom, because the sector is so complex, so complicated. It requires state and central, and every time any government has tried to reboot the infrastructure space, they've not really come up with a good solution or a very formidable plan. Look at how the road projects have been changed, from BOT to HAM, from toll to non-toll. It's a complicated mess. The power sector, attempts have been done, but the attempts have failed completely. So I don't think India is going to be this great infrastructure story ever. It's going to be concentration with very few, innovation at a very few level, consumer leverage, desire and aspire of millennials to spend, and leveraging of the balance sheet.